Well, business confidence continues to improve despite concerns about Greece's sovereign debt crisis creating a contagion effect in Europe. Sacci's business confidence index out this morning shows an improvement of 1 index point between March and April to 84.2. April's BCI is 2.8 index points above April last year. This is only the second year-on-year increase we've seen in 30 months. Joining me with more is Richard Downing. He is Sacci economist. Richard, thank you very much for coming in today.
Pleasure, Stephen.
Well, Richard, perhaps it's not surprising that we have a year-on-year increase in April. As you said in the commentary today, it's only the second year-on-year increase in 30 months. Yeah. But then if you think back to April 2009, it was pretty disastrous back then, wasn't it? And of course, we've just seen the stock market reach its lowest point the month before.
Yeah, and actually March 2009 was the lowest figure for the BCI, 78.9. And then in March it ticked up a bit, and so we're measuring it again, those low points, and that's why we have some positive readings. But still, I mean, if you look at it since September last year, it actually moved sideways to some extent, declined somehow. Then in January starting to pick up again, and now it's continuous sort of increase up to April, and that is sort of promising to some extent. It's a slow pace. I mean, we can't expect something very dramatic to happen, actually. I mean, in the global economy, it's not sure. There's some uncertainty about a W in terms of the business cycle and all that. And of course, domestically, the investment cycle is coming to its sort of reaching its peak and past its peak already. And of course, consumer expenditure, household expenditure, we know in real terms, is actually not what it should be. So, and credit doesn't help a lot. Lower interest rates doesn't help a lot because of high debt levels. So it's a bit of a catch-22 situation that we're in at the moment. And we're seeing, in terms of real activity, actually in terms of employment, you know, figures going down there, and that is not that doesn't bode well for the future as such. But therefore, it's important for policy, and especially the Greece type of situation we had, that type of contagion. If you are seen not to have fiscal discipline, if you are seen to be moving where you actually are dishing out the fruits before you actually have it.
Isn't it too late to say all this because it's all been done already, hasn't it?
Yeah, it happened in Greece to a large extent. I mean, and now to cut back is creating large other problems like political and so on. But still, one will have to guard against that. And we know it's a lot of infrastructure spending that must be coming up in South Africa. We will be sort of assessed against, you know, against that type of situation. So we must see our houses in order.
Of course, our finance minister has laid out, Pravin Gordhan has laid out how he plans to bring that deficit down in the years ahead. Do you think it's very important that he actually sticks to that plan now, because unless we're painted with the same brush as Greece is?
Well, definitely. I mean, you know, Greece's problem is your growth is actually has come to a standstill. So here we still have the promising sort of promise of, say, growth of 3% this year or a bit lower. Next year it can tick up a bit more. So that'll help your tax base to catch up. But on the other hand, it's also the expenditure side. I mean, the demands on expenditure, social expenditure, is very high. That is actually that led Greece into that sort of trap they're in at the moment. So we must avert that type of situation. So I fully agree with Pravin Gordhan's sort of situation, summing up the situation. We must actually help him to achieve that, because otherwise we might end up in real trouble.
Of course, Sacci does say in the commentary today that low real household consumption spending is one of the key constraints to the BCI at this point. You pointed out yesterday the unemployment numbers for the first quarter, and of course unemployment at 25.2%, 171,000 jobs lost in the first quarter of the year, and it's going to be really difficult to start picking up real household consumption spending when we have unemployment at these levels.
No, definitely, and I mean the sort of worrying factor is, you know, your wage rate is actually well above inflation. The claims there is 11, 12, 15% even in an environment of 6% inflation. I mean, that is actually what is worrying. If you look at the liquidations, also one of our indicators there, it's going up still, and that is small and medium-sized business. So they are put under such pressure that they can't sort of keep business going, and that is the worrying factor. If you go into the shopping malls, out of 20 sort of shops, you find 5 empty. And then each of those are 5 jobs actually, as well as a sort of business going. So that is the worrying factor, and we must guard against this. I think it's very important to keep the middle income group going, because they are actually in the small business, medium-sized business, are actually job creators. And that we need it's an urgent sort of necessity for South Africa.
Well, what sorts of policy measures can government be taking at this stage to keep the middle income group going, as you're saying? Should we be having more interest rate cuts following that really poor employment number?
Well, interest rates cut, yeah, to some extent, you know, and to try and over the short term just to fuel the sort of expenditure, but I don't think it's the solution to the problem. The solution is actually to have a consistent policy framework, to add value as such in real terms, physical terms, manufacturing. The rand is a bit of a problem at the moment for those type of activities. So, you know, it's a difficult situation, and we must make sure, you know, that we actually have all our sort of policy options in place and be consistent with each other in moving in a direction that is conducive to a sort of free market system. Because what we're seeing is that some people thought, you know, the meltdown in America and the financial world is actually a free market problem. It was actually not sticking to the free market as such and adhering to some of those basic principles. And I think we passed that, but still we need that in South Africa to keep things going physical and to get physical production and to get a small and medium-sized business really.
Do you think that the new Industrial Policy Action Plan outlined by the Trade Minister Rob Davies a few months ago is a step in the right direction? Do you think that's going to take us where we need to be?
Well, it can help. It can help, you know, to give some certainty in terms of where you're going. At least policy options that is based on, you know, being competitive in the world market, because that's essential. And where you add value, you have to make sure that you can compete with the overseas and also with cheap imported goods, you know, and high productive countries that is actually exporting their goods to South Africa.